What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we're starting to see a bounce across the board, but is it just going to be a lower high before the next lower low? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today's SPY was up 0.65% and we are getting that oversold dead cat bounce because we were just way too far overextended to the downside, way outside the lower Bollinger Band, and when that starts to happen, you're usually going to bounce before going any lower. And I am saying there's a good possibility if we come up to this resistance zone, we could get rejected and still come down towards SPY 430. Now, do not completely rule out the bullish scenario, which is going to require a bull breakout above resistance, because if you look at stocks like NVDA, we are still seeing evidence of very impulsive bullish price action. And these are top 10 companies that move the entire indices. So do not write off the bullish scenario. It is very simple to do because there is a lot of bear bias out there. And while there are reasons to be cautious, you never want to assume the market can only move in one direction. So as my suggestion was, risk off below 442. So below 442, we're going to continue to expect a downtrend until price action proves otherwise, which is going to initially require a break back above this 50 EMA and then eventually a break back over that 20 simple moving average, which is a negative slope and it is moving each and every day. So playing the short-term bounce was a pretty easy trade, but now that we're getting the short-term bounce, it's going to get a little more complicated until we see what happens up here around this resistance at 442. We can get more bullish if we can break above it, but we still have resistance up there at 448. So those are your critical resistance levels, and I still think the critical support is 430, because if you look at my weekly chart analysis, that is where I'm looking to find weekly support, and if we hold 430, we could still be in a bull trend, and that could still take us to the previous all-time highs. So in the short term, manage your risk right around 436 and the critical resistance and the critical support. On the NASDAQ 100 triple Qs, we were up 1.61% today, and we're getting that oversold bounce we expected from 355 up towards 366. But again, the question is, what is going to happen at 366? And if we break 366, then we're starting to get that bull breakout back above the 50 EMA, and then we simply need to break back over the 20 simple moving average right around 370. So watch critical resistance at 366 and 370, and if we break above that, look for the gap fill above 380. And as long as we hold above 355, it is possible this was just a pullback and we're going higher. But if we break 355, you need to get a lot more cautious, because then we'll be likely going to 347, and then we have a gap to fill down here at 333. And as we know, gaps typically get filled, but we do have gaps above and below the price action, and we don't know which gap is going to fill first. So whether or not we fill the gap at 380 or 333 first is to be determined, and you're going to manage your risk around critical support at 355 and the critical resistance at 366. Note, this is a daily downtrend while we're below 375, so it's a lot simpler to assume all bounces will yield lower highs and lower lows until price action proves otherwise and breaks out of this downtrend. In the Dow Jones, we were down 0.13%, and in the Dow, it looks very weak because we had this huge oversold condition and we couldn't even bounce back up to resistance at 346. Now in the Dow, on the weekly chart, it's very important you understand this is a very critical support zone right around 340, and as long as 340 does not fail as support, it is possible this is still a higher low before the next higher high. So in the Dow Jones on the daily chart, watch the support at 345, and if we start breaking below 345, we still have one more gap to fill just above 339, and then that rising 200 daily moving average. So there is possible we could go lower before we go any higher. Now to get more bullish in the Dow, we need to break back above about 346, and if we break 346, you're looking for a resistance at 350, 353, and 356. On the Russell 2000 IWM ETF, we were down 0.15% today, and we're still trading just above the rising 200 daily moving average, which is starting to flatten out, losing its positive slope, and we're looking for resistance right around 185. Now if the Russell can break above 185, it is likely going to run all the way back up towards 188 to 190, and if it can break above 190, then it's looking a lot more bullish, and it could be that this pullback is starting to be over with. However, below 188 is still a risk-off environment, which means we're expecting lower highs and lower lows until price action proves otherwise, with the critical support at the 200 daily moving average right around 183. On the ARKK ETF, we were up 1.78% today, and we have the second day in a row bouncing off the 200 daily moving average. So in the ARK ETF, the critical support is going to remain 39.3. If we break that, we have a gap to fill down there below 36, so keep in mind that is critical support if you're trying to long this ETF. Upside resistance to pay attention to will be 41.3, 43, and the critical resistance at 44.5. On the VIX, we were down 0.87% today, and once more, the VIX continues to crush below 18, and that has been where the VIX continues to find resistance. So in order to get more bearish, we're going to need to see more fear in the VIX spiking above 18 and then reaching above 20, and so far we have not yet seen that. On Bitcoin, we're currently trading right around 26,000, and we were way outside the lower Bollinger Band a few days ago, and so far it really just looks like we're bear flagging just above this support at 25,000. So I do think there's a good chance, even if we get a bounce, that we're likely coming down towards 25,000, and we are getting a little more bearish below the 200 daily moving average. In order to get more bullish, I want to see Bitcoin above 27,000 and holding above that level as support, and so far we're below it, so this is more of a risk-off look. On Tesla stock, we were up 7.33% today with that very strong dead cat bounce, and we now have a gap to fill below, which is down here at 217.58. But keep in mind, it is possible that is an island reversal gap, and if that gap does not fill, that is actually bullish. So in a bullish scenario, that gap will stay open and create an island reversal pattern, telling us we're exiting the downtrend and entering a new uptrend, which does match my projection that I do believe Tesla is getting ready for another bull run. However, it is possible we are going down towards 208 or 197 before that bull run begins. So watch the gap below 218 if we can't hold support right around 225, and are getting a lot more bullish if we could start breaking above 250. On Apple stock, we were up 0.77% today, and I still think Apple is looking very weak because we're not getting a strong bounce and we're simply trading right below a negatively sloping 5 EMA. But that can change very quickly, and if we go up towards support at 179 to 182, that is where we're looking for the next strong resistance that could send us back down lower to fill the gap at 167. So yes, we're getting bounces in the short terms, but because we're breaking out of bull trends, it's possible they're just lower highs before the next lower low. And then quickly looking at the US 10-year yield, you could see we're still getting the bull breakout, which is going to continue to create headwinds, especially for the growth stocks like the tech sector. So keep in mind the US 10-year yield is still breaking out above the October 2022 highs, and we have not yet seen the pivot from the high. And then likewise, the XLF, which is the financial sector ETF, is now the third day below the 200 daily moving average, which is obviously telling us we're getting more risk off while the financials are looking weak and the bond market is flashing warning signs. So jumping back over to the S&P 500, this bounce was to be expected because all downtrends eventually get lower high bounces, but do not get overly bullish until the lower high bounce can prove itself and break out of the downtrends. That's the definition of a risk-off environment, and we're going to remain risk-off while SPY is below 442, which simply means you should not be overly leveraged in long positions while we're in a downtrend. Things can move very quickly in the downward direction because the bears love to take the elevator down, so if we're going into a bearish market and we're going to get a stronger bear trend, things can move very quickly, which is why I call it a risk-off environment while SPY is below 442. So manage risk accordingly. It doesn't mean you can't take long trades, just make sure you have very well-defined risk levels and you take your losses when the trade doesn't work out before they become too large. If you want to come crush this market, consider joining Bank Trade Alerts or the Stocks Channel Discord server, and you can find out how to join either of my services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.